On All About Stocks this week, the market hits another all-time high on Friday to end up 4%. We'll tell you what your investment strategy should be. Our investment advisor, Chokkalingam, tells you why you should be investing in Preall for the long term. And Chokka has made a profit of 95% on his portfolio. We'll tell you how you can make similar returns. Welcome to All About Stocks on ET Now. I'm so glad you joined us, and I'm sure you're glad you're investing in the markets. It's been an extremely exciting week. We're all upbeat about the way it turned out. We've been moving upwards on the market for 7 straight days. We've added nearly 2,000 points on the Sensex this week alone. And of course, ended the week at an all-time high. We're going to run you through what happened in the market this week and how you as a retail investor can participate in what seems to be an unending bull run that we seem to be enjoying. We'll also answer all of the questions you sent in during the week. Now remember, if you have a question, the email ID is at the bottom of your screen. Let me first bring in Ajay, who will give us an update on all of the action on the Lal Street. Ajay.
Well, Faye, another profitable week for Indian equities. We've added about 4% on the benchmark indices this particular week. The emerging market index, MSCI Asia Pac, has also added a similar number. This has largely got to do with the big trillion euro stimulus announced by ECB, but other factors also played in. We've taken out around 29,000 level on the Sensex, 8,800 on the Nifty was comfortably taken out during the week. So fresh record highs are being made in Indian equities. Apart from the stimulus, the rate cut has also improved the sentiment on ground. Even the third quarter earnings season so far is not as negative as most on the street were actually making it out to be. Most numbers so far are either in line or slightly better than estimates. Apart from that, liquidity flows to Indian equities have been extremely strong. In fact, for the entire week, almost on a daily basis, FIs have added positions. FIs are not only buyers in the cash segment, but even on index futures, they've been piling on positions, and that has led to a big up move. If you look at the complexion of the gains this particular week, we saw the old economy sectors, the bank Nifty added about 4%, capital good index, even the power index, though most of the sector indices have gained, barring the FMCG index, which ended flat. It was clearly the large cap led rally which was witnessed this particular week. Broader market indices and the small cap end of the market was clearly languishing and underperformed this particular week. And traders believe that probably there's a pre-budget, kind of a rally which is underway. The noises and the sound bites coming from Davos, from top policy makers, are also improving sentiment and raising expectations that this union budget would be a special one, will be much more reform oriented, and that's why we are looking at this big up move. Traders believe that those who are already in the money and are riding positions should ride, because the up move is expected to continue in the medium term. However, the ones who are investors are wanting to make fresh positions are advised only to buy on declines, because we are in the middle of a big momentum up move. So the stop losses should be extremely tightly kept, because any global turmoil could give a sharp knock on the downside as well.
All right, Ajay, thank you for that update. Joining us today in the studio, Chokkalingam, the founder of Economics Research. Chokka, thank you so much for coming in. Great week, really, to be talking about the markets, isn't it? And we've been talking about the fact that the budget session of Parliament and the budget day announcement, which we know now will be on the 28th of February, will be a massive trigger for the market, because everybody's looking forward to what we're going to hear from this government. What do you think is going to happen between now and then? We have about a month. Are we going to continue to see highs like this periodically until budget day?
There is a possibility of little volatility because of the news coming from Greece. Of course, I have a personal view that it doesn't matter to Indian economy or for the markets, because I've been saying that Greece is a tiny economy. But perception do matter. But also, if you look at last 3-4 budgets, perception play a major role either before budget or after budget. So definitely there will be one bout of either downfall before budget or after budget. Because basically the budget exercise is only to do the summation on fiscal front and to express the intent. So a lot of people mistake the intents expressed in the budget. So therefore there could be little volatility. But however, I firmly believe that from March end onwards till November, there will be a sustained rally in the markets.
So tell me this, if we do hear positive announcements from the government on things like GST in the budget, how do you expect the market to react?
See, market will react positively. Government has to give commitment on GST, but all of us know that it is going to take anywhere from 12 to 24 months to implement. So it is too early to celebrate. But of course, the intent is there. Ultimately, it should be delivered. That will be good for the economy and market, but it's too early.
We've also heard global views this week talk about the fact that they expect crude to stay low, maybe not this low, but to stay low for another couple of years. What does that mean for our market? If we look at, okay, the ups and downs for now, if we set that aside and we look at the next 2 years, and lower crude prices sustained for 2 years, what would that mean for us as an economy?
Two things I want to say that, a lot of people have gone wrong in forecasting commodity prices, particularly crude. Because last 8 to 10 years, the whole market, whether it is commodity or stock market, the role of internet, media, the technology improved a lot. What I'm trying to say that, for every news, the whole world, the investors are, getting the information instantaneously and they are executing the order instantaneously. That is why you see the volatility. And also the ETF fund globally, they exit, they enter en masse. So therefore, what I'm trying to say is that I don't think the oil price will continue to stay below 50. There are already reports of, record level of number of shale gas rigs have been, shut down in the US. And many oil producing countries are not viable at, dollar below 450. I see, oil below 50. I see oil improving, certainly not to 100, definitely to anywhere around 70 to $80 in the next 9 months itself. So even then that will be positive because we have seen a fall from $115 per barrel for the Brent. So it's a great time for India. That is one of the reasons I say that Indian structural bull run will continue. In 2008, the dollar was cheap. First time RBI purchased $78 billion from the market, record level at a record low price. This time again, oil is cheap and RBI is in right direction. Already they bought $22 billion from the market till November. My estimate is that they will buy $50 to $60 billion by end of December. So we are going to end up with a record level of forex reserves. So that will give tremendous boost to the foreign investors and therefore to the markets.
So tell me this then, if you're saying that, between the information we hear on the media, between the fact that global investors are constantly reacting, if I am your client and all the viewers of this show are your clients right now because we've been following your advice for a few years, what would you advise us to do at this point? Should we be reacting? Should we be, monitoring the short-term movements in the market right now? Should we be looking only at the long term? How should we react to this market?
I'm very happy that you have asked this question. I would say strongly that tone down your expectation from the markets. Reduce your greed. I'm not saying that everybody is greedy, but reduce your expectation and, greed. Because, news comes, rumor comes, stocks flares up 67% in 2 days. There are some small software companies with 100, 200 crore turnover. They are quoting 1,000 basis premium to TCS. So this is not sustainable at all. I have got few clients who transferred the shares which they bought in 2007 bull run. Believe me, some 5-6 stocks they are down 90% even after 7 years. So this is going to be repeated. If you look at the entire BSE market cap, it's about 100 lakh crore. And if you look at the top BSE 500, it's about 96 lakh crore. There's about 4 lakh crore accounted for by the small caps. And even 10% of that, 30-40,000 crore, if smart investors dump in the market, demand money, neither FIs will support, nor domestic institution will support, nor the smart investors will support.
So what should we do then? Should we be taking money off the table at this point?
Definitely from the small cap where the valuation company is not there. Don't bother if it is moving up continuously. But if you feel happy with your money and take the money out, if not, again putting in good quality stock, put them in the bank deposits.
Okay, so this is interesting advice. You're saying I should pull out the entire list of my portfolio right now. I should separate the small and mids from the large and book profits from the small and mids?
Just one line I would add, look at the valuation.
Okay.
As I give an example, there are some small pharma company, quoting 2 times costlier than Dr. Reddy. There are small software companies with under 200 crore turnover.
And this is through the PE multiple I should be looking at the valuation?
PE multiple, management quality, you just look at some software companies, small companies, down almost 50% in about 5-6 trading days. So poor investors, because it was running up continuously, they entered, and so that can happen definitely this year itself. So to avoid your wealth destruction, I say that you look at 3 things: management quality, the valuation as compared to the leaders in the industry, and balance sheet, the debt leveraging. Then take a call and book profits.
Well, Chokka was kind enough to design a portfolio for us exclusively on this show on the 8th of August 2013. That portfolio is currently at an overall gain of over 95%. The Nifty over the same period is up 58%, so we're outperforming the Nifty by about 36% right now. I'm going to give you a list of the stocks in that portfolio and then we'll talk about it. There's ITC, Wipro, RIL, International Paper Corp, Claris Life Sciences, Naivagli Lignite, Bombay Burma, Emphasis, Karur Vysya Bank, Bama Lorry, Moil, Biocon, KCP Sugar. Chokka, I'm going to ask you to do this now. Since we talked about it in the beginning of the show and you advised us all as investors to pull out the list, take a look at our portfolio and find out where our comfort level is in terms of valuation, why don't you do it for your own portfolio and tell us, if you're comfortable right now with all of these stocks?
While I'm choosing the stock itself, I have filtered all those on the basis of these three parameters I mentioned. 2-3 stocks I'm going wrong in the short term. But per se, there is no wrong, with any of these stocks, whether in terms of balance sheet or management quality or performance. 1 or 2 quarterly performance slipping down is very common, But the market reacts as if there is no tomorrow if the quarterly results are down. So that's the only problem I face in some of the stocks. But I would suggest continue to hold.
Continue to hold all of them? You don't want to make any changes?
Only 3 large cap stocks I would like to remove because, I feel that value investing, for long term is still preferred. So instead of having just only 3 large cap stocks, I thought I would remove. But of course, if any investor is very conservative, want to have defensive, don't follow this in totality. If you are having average profile, always maintain 40% in the large cap. But this is designed only for the large cap, long term investors. So therefore, I wanted to pull out ITC, Wipro, RIL. Replace them by JB Chemical, Polaris and South Indian Bank. And I firmly believe 1 to 3 years, all these 3 names, anywhere from 50% to 100%, they can give return.
All right. Okay, so this is very, very clear. If you're taking any advice on the show right now, it is only if you have a 3-year time horizon, you're willing to stay invested in 3 years without getting nervous about what happens in between. I'm going to give you a recap of Chokka's portfolio. But remember, we've talked about JB Chemicals right now on this show 3 times already before going into our first break, which means we're going to be tracking this stock very carefully for Chokka when he comes back into the studio the next time. His portfolio as it stands right now: JB Chemicals, Polaris Consulting, South Indian Bank, International Paper Corp, Naivagli Lignite, Bombay Burma, Emphasis, Karur Vysya Bank, Bama Lorry, Moil, Biocon, KCP Sugar and Claris Life Sciences. That is the list of stocks right now. Remember, we will track this portfolio on the show week after week. Every time Chokka is here, we'll ask him about it. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. G. Chokkalingam is still with us and he's helping us pick out stocks for our portfolios. He's been kind enough to choose a stock for this week for us. He's picked out Preall. That stock ended the week at about 43 rupees. Now, for those of you who are not familiar with the stock, it's a manufacturer and supplier of automotive parts, auto components and accessories. Now, it is a fairly small cap company, about 408 crore rupees. And one of the things that a lot of investors might be slightly nervous about is that the last quarter numbers that came out were not great and the stock corrected a fair amount. But does the management give you confidence right now in spite of that correction? Yeah,
definitely. This management I have been tracking for nearly 2 decades. I am very comfortable and also balance sheet is quite strong. Long-term debt is very small. And they also have a plan to go global. And in fact, they are planning to take over an auto component company in Brazil. So I believe that, being an auto component, there are many small auto component companies which are quoting 1 to 2 times sales, whereas this is quoting just 0.5 times sales. And also in terms of PE valuation, it's around 10-11 PE now. And with the auto sector expected to turn around, I firmly believe that the company should do well.
I'm going to ask you a slightly different question right now. For any retail investor who's putting together a portfolio, the normal tendency is to pick one auto stock. Would you recommend that we have a large cap auto stock and then get an auto component stock into the portfolio? Or can we use this as a proxy for the auto sector and bypass that entirely?
Very good question. You should not use this as a proxy for auto sector. As I said, if investor is average profile, he doesn't want to take risk, then this is not suitable at all, this kind of approach. But I have seen, we have covered stocks like JK Tyre. There are a lot of concern when we spoke on JK Tyre in the same channel several times. Today you look at the FIs buying. The typical example is SEAT. In 2013, September, SEAT was around 82 rupees. And at that time, my memory is right, FI penetration was only 4%.
Yes.
And that became now, it's almost around 24% now, then stock went to 1,000. So I can quote n number of examples. Even in Mumbai, Phoenix Mill, when I landed in Mumbai in 2002, the market cap was 24 crore. 2007, it became 6,000 crore. So according to me, the risk doesn't come from the size of the market cap. It comes from the idea itself. So if parameters are proper and with 5% luck, 95% hard work into choosing the idea, you make a phenomenal money.
Srinivasan writes in, should I buy Gujarat NRE Coke at current levels? And what should I do with that stock? Now, this is actually an interesting question. A lot of investors assume that if the stock comes down to a single digit, then it's cheap, which might not be the right idea, is it?
I'm very happy that you asked this question. It's an absolutely wrong approach. This is where the greed comes in. I got a call after seeing, one of our viewers seeing this TV. He asked Tulip Telecom. He bought because it was cheap at 7 rupee. Then when it got suspended, he got panic. See, cheapness comes only in terms of the valuation multiple, not in terms of the absolute price. So if you look at the company like Gujarat NRE, you have got a 3,000 crore of debt and one quarterly revenue was around 100 crore. So making huge losses. So, I have no confidence, but the fact is that if you see in the last 2 decades, most of the stocks which ultimately eliminated from the stock market, they go through the journey of double digit, single digit, then 15 paisa. I think psychologically 15 paisa is the limit, because if you sell anything at 15 paisa, after broker takes his commission, you will not get anything. So this is the journey most of the failed companies go through. So this point or this fact the investors should understand. So they should not go after absolute price and buy the stocks.
All right. And for someone like him, so he's obviously, I'm going to assume Srinivasan's a gentleman who likes to take on a little bit of risk because of the stock he's trying to pick out at this point. Would you recommend that he looks at maybe Preall then instead? Preall
or Janus Power, we have mentioned Janus Power also. It's not participating. That is a problem with the value stocks in this kind of bull market. If you look at September quarterly results, turnover is up by 40% year on year. The operating profit is up by almost 50%. Because they have written off the past investments in that one quarter, the stock is not performing. Whereas it is into power component, and we all know that government is proposing hundreds of billions of outlay in the next 4 years in the power sector. So that kind of stock with strong balance sheet, good management, you should buy.
All right, so stay away from Gujarat NRE Coke. And of course, if a stock is trading at 5 rupees, you should ask why. And you should look into that. It's not exactly an opportunity to buy. Another question. Anthony Xavier has written in 100 shares of Biocon, which he bought at 518 rupees. Should I hold on to that stock? You have Biocon in your portfolio.
Yeah, along with him, I am also going wrong temporarily. But I remain fully convinced.
See, do you? But I mean, the numbers were not great.
Definitely disappointing. But the fact is, you take example of Unicum Lab. September quarter, I think my memory is right, profit is down by 70-80% year on year. And December quarter, the profit is down more than 90%, but the stock is rock steady. So this is the problem with the perception played out in the market. Now, if you look at the Biocon, if anybody has to create this kind of company, even in 20 years, nobody can create this kind of technology company. And look at the valuation also. You look, there's a cash, debt free, and the subsidiary itself is valued, which is around 42% of the market cap. Yeah, day will come. The stock will perform exceedingly well. So you should add more and reduce average cost.
The management is considering listing its research arm as well. But, I want to go back to what you said in the beginning of this answer. You said that like me, we're both going wrong on this particular call. And for anybody who's looking at a portfolio, especially in a market like this, it all seems great. And then there's that one stock that sort of worries you. Tell us how long we should wait. 1 quarterly numbers, maybe 2 quarters, 3 quarters. At what point should we decide that, okay, these bad numbers are consistent, I'm not going to hold on to this stock anymore?
Certainly, you have to look at the valuation, management quality, balance sheet comfort, the business model. But everything is in favor of this company. If you, there is no time. I can give you a number of examples. Like Bharat Electronics, I bought for my clients at around 1,300. And it went through a lot of stress when it became 800. 800, the cash was equivalent to the market price. So, the same stock, now 3,300. So, what I'm trying to say is that as long as the fundamentals, balance sheet, management quality, they remain convincing, don't give up. Look at the Shalimar Paint. It was 25 rupees for 3-4 years. Finally became 1,000 rupees about few years back. So, passions will pay. As long as these 3 parameters are intact, don't lose opportunity.
All right, okay. I'm going to take one very quick question before we wrap up this particular segment. Balakrishnan has written in. He has 1,500 shares of HCC, which he bought at 33 rupees. He wants to know, should I hold on to that stock? I'm going to pull that stock up on your screen. It ended the week at 29 and 30 paise. What should he do with HCC?
Again, this is not fitting into my domain of value pick, but you should hold it because there is a IPO for Lavazza. Yes. So on the eve of IPO, the stock again can recover back to its cost. So wait for that time and get the cost back.
All right, and don't be greedy. As soon as you get that cost, get out of the stock.
Yeah.
Welcome back. I'm so glad you stayed with us. You're watching All About Stocks at ET now. G. Chokkalingam is still in the studio with me. He's helping us pick out stocks for our portfolios, and it's time for us to find our one lucky viewer of the week. This week, it's Karthik. Karthik sent us a list of stocks that are worrying him in his portfolio, and I can see why. He wants to know which of these stocks, Chokka, he should be holding on to. The first on his list, he has 100 shares of JP Associates, which he bought at 26 rupees. That stock ended the week at 26 rupees. What should he do?
Ideally speaking, I want any of these stocks because all of them have huge debt. And in fact, he has put 69% of the money in infra stocks and balance in a single stock, which is Allahabad Bank. This is not the right approach, that's shown in his portfolio also. Even in the bull market, he is losing so heavily. But still, considering the fact, he is losing heavily and also, some tactical opportunity, I would suggest hold all except JP Associate, because the way they are selling the good assets and retaining, inferior assets, and still they would end up with a lot of debt. Yes. So I would suggest shift from JP Associate to Chinas Power. Otherwise, other three stocks he can hold and hope for recovering his cost.
And I also ask you about Allahabad Bank. Now, he bought this stock at 160 rupees. It ended the week at about 126. Now, of all the banking stocks available, is this the best one for a viewer to be holding at this point?
It is not the best stock to hold, but since he has bought, he can hold it, and it's trading around a one-time book value adjusted. Because of the rate cut, the PSU banks can improve their valuation multiple to at least to 1.2 times the adjusted book value. So therefore, I would suggest to hold.
All right, interesting things we learnt on the show today, that it's not exactly the price of a stock that shows you the value. So whether it's 5 rupees or 1,000 rupees doesn't really matter. It is the valuation of the company, which you can read from the quality of the management, the idea of the business, and of course the P valuation of the stock. That's what Chokka has taught us today. It's also, he told us to take a look at our entire portfolios and decide if it's time to take some money off the table, especially in the mid and small cap sectors. Chokka, before we wrap up, very quickly, do you have a disclaimer that you'd like to give us about these stocks?
Certainly. Among the stocks I mentioned, I personally bought South Indian Bank, Karur Vysya Bank with the due compliance process.
All right, so that's Chokka's recommendation. Thank you so much, though, for spending time with us and answering all of our questions. You'll find a copy of the show on our Facebook page, and of course, you can reach me on Twitter personally. Thank you so much for watching.